Hello, everyone. Welcome to Our 2 Cents with MBA. I'm Jackson Hadaway, Senior Vice President of Marketing, Communication, and Member Service at the MBA. We appreciate President and CEO Max Cook, and we welcome hearing from you, your thoughts on that podcast, the topics we need to be addressing in future podcasts, and just generally everything we can do to make this an informative and engaging tool for you as the bankers in the state that we want to communicate with. We're excited that today is our second podcast and our first time with the formal name Our 2 Cents. Our 2 Cents, because we have the right person for the big reveal. Today's guest is a lifelong banker who recently took on a new role in his career. He is being exposed to and learning a new side of the banking industry, one that he saw deeply and intensively as a banker, but now he's bringing that previous experience as an asset to his new endeavor. And that person is Rob Barrett, our new Commissioner of the Missouri Division of Finance. Rob, thanks for joining us. We're glad to have you here.
Thank you, Jackson. I really appreciate this opportunity. I really appreciate the chance to go after Max because I know the bar very high. And so he's an easy one to follow, and it'll be easy to really look good.
We really wanted to have a low bar for you when you came in. That's well said. Well, I know that for many of our audience, you're a familiar figure. They've seen you around the industry for any number of years. They have, of course, supported you as you moved into your new role. But there are also quite a few people like me. I've only been at the MBA since November who haven't had a chance to get to know you as well. And I'm sure for some of our younger bankers out there or people who haven't been to a lot of MBA events, they'd like to know a little bit more about Rob Barrett. So can you give us a little of your biography? What's your journey been in banking? What's your journey been in banking that led you to where you are today?
You bet, Jackson. I grew up in northwest Missouri. Holt, Atchison, Nottoway counties, up there, Craig, Mound City, Tarkio. And part of my background has always been agriculture. My dad voag for 34 years. I remember I bought feeder pigs from my neighbor, and I'd go down to my local bank, the Exchange Bank there in Mound City, and borrow money from Carson McCormick. And I'm not sure that Dad ever co-signed those notes, but that was kind of my first experience. I do know my folks put 5 of us through the university, so we've got Mizzou pretty deep in our DNA, and that's a lot of my background. But I also know that I received the Exchange Bank scholarship to Mizzou, a $500 scholarship, graduated from high school. In '71, that was a lot of money. Mm-hmm. And that has helped kind of form my background, not just with ag, but with community banking and how they supported young people and their futures. So I owe a lot of my banking background, not only to that scholarship, but to my banker, Carson McCormick.
Wow.
I taught VOAG for 5.5 years and until I finished my master's degree. And then I was ready to do something else. And I had the opportunity to go with the Birches and the Thompsons and the Skinners into the bank I was teaching, First State Bank of Dearborn. And so that's really where I started my banking career, in community banks with people like the Thompsons and the Birches and so forth. Then in '83, we had the opportunity to buy a small struggling bank in Sheldon, Missouri, $1 bank, with some problems during the ag crisis. But we were able to get it cleaned up, moved it to Nevada. Since then, we had added facilities in 4 different counties. I do know Ken Littlefield was was the Commissioner of Finance when we bought the bank. So I had to sit So I had to sit across the table from Ken and convince him that our loan loss reserve was sufficient. That's a long ways from Cecil today. But Eric McClure, another past Commissioner of Finance, was an examiner and examined me. I can remember when we were in Nevada, a loan was okay not to be charged off. So I've kind of had a little bit of role reversal, and those 2 guys had an impact on my banking career without a doubt. But in the process, my background with banking, we bought a $5 million bank, Farmers Bank of Walker, directly to IC. We purchased savings and loan in Lamar from the RTC. And we actually bought our shop in El Dorado Springs from Union Planners. Now, Union Planners was a sound banking institution, and they were just trimming their branches a little bit, but a lot of my background is cleaning up problems. I've been through closing 2 facilities and recognized firsthand the community impact and how that affects those people in that area. Part of what I'm bringing to the Division of Finance.
I think that's fascinating when you talk about where you started in the world of banking. It wasn't really in banking. It was in the ag world. It was family farm, and then getting connected with that exchange scholarship. And the next thing you know, you're kind of just involved in it deeply. And I think that for many of our bankers, their journey to get into banking doesn't look like they picked it as their career. They just kind of found their way there through different avenues. And for many of them, it's ag, and for others, it's any number of entry points. But the careers they can build, I think you're a great example of. You can take yourself from just a scholarship all the way to owning and running your own institution.
I always say that Carson taught me how to type too, because he'd spin around and type the note right there himself, but with 2 fingers. And that's the way I type today.
Well, it's great that your background. Well, it's great that your background involves so much of running the banks and helping with the struggling banks, and recognizing the impact that has not just on the dollars and cents, but on the people in the communities. And I think that as a commissioner of finance, that's an important piece of the puzzle. And you've been appointed to the division commissioner. So what have the last few months been like for you, going through that whole process, and now that you're really launching in with your team at the division?
And Jackson, they've been fun, involved, and educational. I just picked up on the fact that you and I started about the same time in November. And so I do know that Susan and I looked, at 8 houses on the day after Veterans Day. That night we made an offer on one. The next morning it was accepted, and 10 days later we moved into that house, and on a Saturday, and Monday the 25th I started at the Division of Finance. So we did it quickly, and it worked out very, very well. We had a lot of help, but it worked out very well. But that's the pace we've also kept at the division. We had some challenges, some items that needed to be addressed. Division appreciates the fact that some things that have been challenges for the past maybe 2 years were corrected promptly. Now, I need to be the first to admit that it wasn't just me that enacted that. I do know Max and his executive officer team and so forth enacted that. I do know Max and his executive officer team and so forth blazed the way and made a big impact on helping with those corrections. And so, as usual, the Bankers Association have been a big help, as well as bankers pay our bills, obviously through the assessment, and they need to get what they're paying for. So it's been real progressive, and we've accomplished a variety of things, a variety of goals that we wanted to. But I found out that I had a pretty good background in what I needed to know. But I also have realized that we have a tremendous team, a great group of people over there in the Truman Building. I've not asked a single question that I didn't get an immediate qualified response. So they're a helpful group, and I say that not just for me, but that they're that way with the bankers as well.
Yeah, so you have a lot of confidence in the people who are out there doing the yeoman's work.
Tremendous amount of confidence. Yes. Mm-hmm.
Well, I know you already have some goals and priorities in mind. What do those look like for the division? What should our bankers expect? Priorities in mind. What do those look like for the division? What should our bankers expect to see from their regulators and contacts on your team?
Obviously, to keep banking sound, to keep community banking sound and hopefully profitable throughout the state. And that's the industry, of course, today is very strong. We've accomplished a variety of our short-term goals, and we feel real good about filling our staff and establishing the division's autonomy and a variety of things like that. But so we have two other goals, a little more long-term. I mentioned our bank in Sheldon in '83. The regulators, FDIC, Division of Finance, and so forth, had to gear up with examiners in those days just because of the ag banking crisis. And a lot of people are about my age, and brings us a lot of talent, a lot of background, and so forth to our industry. But at the same time now, our exams have become more efficient. We don't have as many banks to examine because of mergers, acquisitions, and so forth. So there's not a tremendous demand for examiners. But we do need to hire young people. We do need to get some training going. Absolutely been necessary in the past few years, like I say, because of the soundness of banks and the efficiency of examinations and so forth. But we need to start hiring some young examiners. So beginning this spring, we're going to incrementally start bringing on young people, training them. They'll learn their career on good loans, especially with the mentors that we have available now. The second thing that we have that is a real challenge, not a new challenge, is the senior leaders of our group. Their salaries cap out with our career ladder, and so we have a real pay challenge. We lost a young examiner. I say a young examiner. He was a senior examiner to the Fed just during my tenure. And I spoke with him personally, moving back to St. Louis and going with the Fed. But he also told me, he said, "Rob, I'm moving. My starting salary is going to be $20,000, over $20,000, greater than I'm making today." He says, but that's not the only reason I'm moving. He said, my starting salary, $9,000 higher at the start than it would be with me down the road.
Wow.
When I retire. So we have a big challenge to get that career ladder adjusted. So we pay for the quality that the ladder adjusted. So we pay for the quality that the bankers need.
Mm-hmm. Mm-hmm. Yeah, I think those are interesting, and I'm sure they hit some notes. The idea of hiring young and training people up, that's certainly prevalent across the banking industry. As banks are looking at succession and new leaders that need to come up. It's interesting to hear it's no different from the regulatory side of things. We have to have those kinds of talented, capable people. But you got to be able to pay them. You got to be able to compensate them to stay around so that we have good, in 20 years, we still have good, sound regulators capable of supporting the banks, doing their job well.
The retirement system and Missouri examiners don't have to travel as much, be away from home as much as some of our counterparts. So we do have advantages in that respect. Mm-hmm. But one of our priorities beginning this spring as we start to work on the next fiscal year and so forth is we need to correct our career ladder at the top.
So in the good news category, you have managed to do some hiring since you've been at the division and some appointments that are going to make a difference. For the past few years, the division hasn't had a full-time deputy commissioner or chief counsel. And about a month ago, Mick Campbell was named deputy commissioner and Jamie Gallagher was named chief counsel. So what can you tell us about these folks and what their appointments mean for Missouri banks?
We're real happy to have Mick. Mick is a graduate of Missouri State University and has been with the division for nearly 16 years now. He initially was a consumer credit examiner, and he specialized particularly in real estate and compliance, and he actually evolved into the supervisor of mortgage exam and life division. And so he brings a lot to the table in that respect. But he also has tremendous background in legislation and administration and so forth for the division. So he's going to be real critical to me, especially in managing our division right there on the 6th floor. Jamie has his law degree from the university at Mizzou. He was the senior counsel for the division for nearly 11 years, and so he too brings tremendous experience and background into that position. He was a special prosecutor for Cole County and a partner in a local law firm here for nearly 10 years before that. So Jamie has a very diverse background in corporate consumer law, but also in tremendous help to us, not just in banking and finance law, but also has already stepped in, filling a big void with legislation. And so we're excited. We've already filled Mick's vacancy, but we'll soon be posting for the vacancy that we created by advancing Jamie, and we'll add another person into that staff as well.
You are moving over there at the division. You're not letting things just lie still. I think it's good to hear there's change afoot.
Absolutely. Good to hear there's change afoot. Absolutely. I don't think it'll ever get boring.
So in that wave of change, there's also been headway on the state banking board. It's been quite a while since the board was active, and Governor Parson recently named 3 bankers to the state banking board. Thane Kiefer from Bolivar, Jay Knudsen, Harold Miles from Advance. What kind of activity should we expect to see from the board, and why should bankers be excited about it?
I'm excited about it, and I really appreciate the fact that Governor Parson has stepped up and started to fill this role. Initially, with these 3 appointments, that will and rejuvenate that board's activities. Again, thanks to Max and the MBA for pushing and getting this rekindled. It's going to be a big help, not just to the division, but also to bankers. It'll be a typical board. They won't run the show, but they'll certainly have tremendous input. Statutorily, they can override our decisions if necessary. Them in 2 other principal roles: one as a conduit to us from the bankers. They'll be able to voice whatever they're hearing and seeing directly to us from the local community banks, and I think that input is really critical. I recognize that lots of times a bank might be reluctant to voice an opinion because they fear that we'll be in their bank the next week, and that of course is not so. But with a state banking board, it does provide that to voice concerns. The other thing that they'll do, and particularly because of the governor's appointment, they'll have a direct link to the governor and our state legislator. That's critical, and with a variety of things that we have going on. Right now, they'll help us play a big role in working across the street, if you will.
So it'll be an important entity, both in terms of information coming into the division and in the relationships that the division has in the Missouri state government.
Yes.
Yeah, it's a really interesting development, and certainly something I think we should be excited about.
And we haven't met yet, but our goal is to have our first meeting yet this first quarter, and at least quarterly thereafter. And in visiting with Jay and Thane and Harold, they're all very excited, and I'm confident they're knowledgeable and anxious to do their part.
That's wonderful. Well, given your banking experience, your staff's experience, the revitalization of the state banking board, and everything else you have going on, what can bankers expect from the Division of Finance now and moving forward?
Like we've already touched on, particularly since our industry is doing well and banking is strong. I'm urging our examiners to be very proactive. I'm wanting them to maybe forecast a little more, have some even, and working with them to maybe forecast and project. Not that anything's going to be on the report or that it'll ever be written up, but we want our bankers and our bank examiners to be very proactive. It's tough to clean up problems. Examiners to be very proactive. It's tough to clean up problems. It's difficult to correct challenges, but it's even more difficult when the banking climate changes and turns the other direction. So as much as possible, we need to correct challenges now while banking is strong. And so we want to look at that as closely as we can and maybe head off maybe problems in the future.
I think there's a lot of wisdom in that, particularly as we look ahead and try to figure out when the economic cycle will flip. As
Yes.
inevitably happens in every boom, there's going to be a bit of a drawback at some point. And I think being proactive is something Max talked about on our first podcast that really resonated, and to hear you say it again at the division, I think is very important.
Without a doubt.
Well, before we sign off, can you just share your 2 cents with us, your 2 cents on banking and the banking industry?
You know, I was trying to think. First 2 cents would be thank you. Thank you for this opportunity. And as always, thanks to the MBA for everything they've done for me and my entire family. And finally, I'd be remiss if I just didn't bring out one point that all our bankers everywhere need to focus on is PACE lending. That's a problem, particularly in Missouri, because with that PACE program, those loans for energy efficient improvements to a home take a senior lien position for any mortgages that might be already recorded in the bank. The Federal Housing Finance Administration, the supervisor of Fannie and Freddie, has a request for information that because they're considering tightening the standards for Fannie and of this threat that PACE imposes with the senior lien position. The Federal Home Loan Bank will not take a loan as collateral that has been subjected and becomes a junior lien position as collateral. So there's tremendous impact, and so legislation is just being started to correct the challenges, but it's important that every banker in the state get with their senators and their representatives and be sure they understand that this is not just a protest against energy efficient improvements. It's a correction to this loan underwriting and senior status that really jeopardizes the safety and soundness of banks' loans across the state.
Well, at the division, I know I speak for everyone at the MBA, and I'm sure all of our bankers when we say we're thrilled that you are the commissioner, and we look forward to everything that's going to happen at the division during your time there.
Thank you for that. And again, thank you for this opportunity.
It is our pleasure. And to our listeners, thank you for taking the time to join us. If you like this episode or have thoughts about future podcast episodes, again, feel free to contact me, Jackson Hadaway, or Lori Bruce, Director of Communications at the MBA. We love to hear from our bankers. We'd love to know what you want to hear about, and we look forward to bringing you engaging content moving forward. For the latest news from the Missouri bankers, please visit our website, www.mobankers.com, or follow us on Facebook, Twitter, LinkedIn, or Instagram. That's it from our end. Thanks for joining us, and have a great day.